And also, we're going to talk about not just the credit stuff, but also TCPA, the Telephone Consumer Protection Act. For
Yeah.
example, let me show you something. About just a couple of days ago, uh, there's a mortgage company over in Irvine, and this pertains to calling and text message, not emails. It too early. Can't do it before 8 o'clock in the morning. Can't do it after 9 o'clock at night. So this company called American Heritage Lending over in Irvine, California, one of their agents was sending me text messages at 6:30 a.m., about five of them. And under TCPA, if you catch them, it can cost that creditor or company $1,500 for the first violation and 500 for every thereafter. So in that example, $3,500. Ended up, I got my TCPA check for $3,500 just yesterday.
Oh, oh my.
Yeah.
And this is recent, literally
Get
just
to it.
yesterday.
Yeah, it happened. Well, it happened back in April, May. So
Okay.
I let I put my phone on silent. I don't care. They come anytime. Listen, it was like every Monday, keep coming, keep going, 500, 500, 500, 500. But it stopped after five. And they didn't want to caught off guard. They caught it. Oh, the system's detecting someone at 6 o'clock in the morning. So email the CEO, this was last week on Thursday, TCPA, compliance violation. Here's attached proof and screenshots of the calls. And he says, he sends me an email on Friday. He said, no, Thursday afternoon. Robert, send me an address where we can send you a check. That's it. Yeah.
Wow.
Yeah.
Okay.
3,500
Got
bucks.
it.
See, so,
If that's
yeah.
not a testimony enough, I don't know what people need to know that
No,
these laws are real.
because it does go in hand, and this includes collection agencies. So it could be a telemarketer selling timeshares, a lender accidentally sending text message or calls trying to get you on a mortgage, sales call, or a collection call. It's the same thing. It happens all the time, and people don't know the
That's
rights.
it.
Yeah.
So I love your personal example and your story. And I love that it's literally recent. We're talking, you just got the check today in the month of June.
Actually, yesterday, yeah, Monday, yeah, yeah, yeah. The check's dated May 27th or something like that. See it?
Okay. Oh,
Yeah. So you can't.
extremely recent.
Yeah.
This is not something from 10 years ago or 5 years ago. We're talking about laws that are applicable
Yeah.
today, regulations that, if violated, will cost them money
Mhm.
and make you money, and it's tax free. So
Sweet. Yeah.
that was your personal example. Can you give one or two examples of clients that you have already helped?
Under because of like FCRA violations and TCPA, of course, first thing you can act as your own lawyer. I mean, if you're on in court, small claims, or you're in court for murder, rape, or some kind of vandalism, you can represent yourself as your own lawyer. Of course, someone else can't represent unless they're an actual lawyer and you hire them. So in this case, I could have hired a law firm, but I know enough about it where I did it on my own. But it's not that hard. But in a lot of cases where collection agency, the biggest violation under TCPA, let's say you're getting a collection agency calling you from Chicago and they're calling your area code in LA. Let's say it's 310. And if the collection agency is calling you on a 310 number that matches your area code because they're trying to get you to pick up the call, you say, hello? Yeah, yeah, Robert, this is so and so clutch agency. We're calling about Bank America. But I said, the first thing I say, are you guys in Los Angeles? No, we're not. We're in Chicago. So why are you calling me from a non-Illinois phone number, area code? And that's violation of that alone can cost them $2,000 off the top, and make that, force them to go away, waive the debt, and deletion from your credit report, so you can get paid, deletion, and go away all at the same time, even if you owe the money. See, so but there's variations of that. It doesn't matter if it's a Marriott timeshare trying to call you. It doesn't matter if it's a clutch agency or if someone accidentally that program my number. They thought I had a New York number, not a California number, and it cost them dearly on that one.
Okay. But if you have like stories of individuals, and even if you want to share a story of an individual, a couple, or a business, so that way they have an idea, they can basically see themselves in that person's shoes.
Yeah. Most definite. Yeah, 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 yeah. It'd be hard to see me in my shoes. 'Cause I have a size 14 shoe, so my feet are kind of big. So I don't know if that'll work out. But yeah, 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 yeah. Baby needs a new pair of shoes. But anyway, but no, definitely, I got plenty of real true stories I could tell about identity theft. collection agencies, TCPA violations, FCRA violations that could make these consumers capitalize, get compensated for those mistakes. This is a couple years ago, December 2022. A client of mine called. She's Vietnamese, so she lives in Little Saigon over here in Orange County, and she gets back from Vietnam around middle of January 2023. Someone had committed identity theft on her report, and this is a big success story, one of the biggest in my career. And so she called me up, referred by a company called Loan Factory, which is predominantly a Vietnamese mortgage company, and got a report. And we had everything cleaned up within a couple of months. But we took it a step further. Car loan companies, there was 5 car loans on her credit report: Porsche, BMW, Mercedes, Land Rover, and Toyota, for example. And whenever you buy a car online, they're supposed to go through 3 levels of ID checking versus if you're in person at a car dealership, here's my license, you're on camera, shake hands, right? It's in person. But online, I could be acting like you, even on a video call with AI. I pretend I'm a woman, not a guy, right? As an example. So they didn't do these auto loan companies did not do the proper ID check. So people bought a Porsche, BMW, Mercedes, blah, blah, blah. The cars they got bought, they got shipped out of the country and they're gone. And she got left holding the bag on all these $343,000 worth of car loans. So one day when she was gone, a few days from getting back, someone knocked at the front door over in Westminster, California, say, "Here, we're here to repo the Mercedes." And her daughter says, "From my mother?" Yeah, she went by Kim. I said, She doesn't have a Mercedes. She drives this Toyota, that, blah, blah, we don't have any Mercedes, never have." He said, "Maybe it's a mistake," and they left. So she realized it on her credit report because, she was going to try to buy a home and these 5 accounts showed up. So after we had them cleared up by March of 2023, I said, we're taking a step further. Got a credit law firm out of Orange County, sued the heck out of all 5 of those car loan companies. And within months, about this time of 2023, 4 of the 5 car loan companies settled for a total of $1.1 million in financial damages. And Toyota is going to settle in early July of this year for another $250,000. So she'll have a total of $1.35 million tax-free settlement. Now that's unusually large. In the case of ID theft, if you go after the creditor, for example, maybe 5, 10, 15,000 is more common. Still not a bad payday. 15 grand could be a nice down payment to buy a nice car. But
And it took a year for you to clean that up for her.
No, it took you 2 months to clear it off for a credit report and less than 6 months to get the settlement. And what one creditor it's taken a couple more years, but 4 of the 5 settled by June of that year, 2023, all within 6 months or less. So she got 1.1 million plus the attorney got paid their legal fees on top of that. So she netted 1.1 tax free because any settlement is a tax free situation. And the other $250,000 coming in later this year. She's ecstatic. She bought herself a couple of homes with it, but that's abnormally large. But the average one could be 20,000, 5,000, $10,000, 15 grand on average, maybe a couple thousand, but still pay a couple thousand can pop someone out a lot, for these violations. That's what I'll tell people on Saturday. Identity theft is on the rise, and I probably see a few hundred cases a month that are minimal to major victims of ID theft. And this is how you protect yourself. And this is what you can do moving forward to resolve the problem quickly. Doesn't take years, just months or less, sometimes even a month. And how they can capitalize on it by actually going after the creditors that screwed up in the first place.
Wow. That
Yeah.
is worth hundreds of, if not thousands of dollars,
Yeah.
right? The
Easily.
peace of mind.
Yeah.
Yeah, but also just the knowledge of what it is that they're supposed to do when a situation like that arises and what their rights are, right?
Correct. And collection agencies, same thing. Doesn't matter if it's a Marriott timeshare company calling you, and if you're especially as on a consumer line, you can be part of the do not call list, do not call.gov, which no one ever pays attention to these days. And if let's say, for example, if someone's calling you during legal hours after 8 o'clock or before 9 o'clock, at night, which they have a 13-hour window per day to call you. Let's say they're calling you at noon or 11 o'clock in the morning. Hey, you want to buy a timeshare? Instead of hanging up on them and say, "Don't call me again," or block them, go with the flow. Say, "You know what? Your timing is impeccable, Mr. Smith. I've been thinking about taking a vacation to Mexico with my wife, my husband for a long time. and he says, listen, I don't have time right now to talk, but can you send me an email with your information? And you say, sure. And hopefully they will do this. If they're smart enough under, again, TCPA, they know that this phone call is illegal. So let's say they send you an email in the electronic letterhead, Marriott's Vacation Homes Company, blah, 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 corporation. Here's a lifted up. So as soon as you get that, that's considered under TCPA, $1,500 off the first one. And then now you wait, right? And there, after that, if they call you or send you another email, 500, 500, 500, 500, 500, 500. I had people where they got combination of text messages, phone calls, and emails that are in the 20, 30 times range, and 1,500 for the first one and 500 for everyone. Let it pile up. And then we go to a law firm that specializes in TCPA. Here's all the proof, screenshots, emails, everything. Give to the attorney. The person signs their contract, nothing out of pocket for expense here. And so let's say, for example, if it's 20, one email and 20 text messages, phone calls, or whatnot. So it's going to be 1,500 for the first one and 500 for the next for 19. So 500 times 19, whatever that comes out to be. That's another 10, roughly 10 grand or something like that, roughly give or take,
A little shy.
maybe,
Yeah.
maybe 11,000. So the attorney sends it in, and within days, that person will have a check. They're going to have their 10, 11 grand plus the attorney's going to get paid their fees. Doesn't come out of their portion. They're going to get that plus attorney fees. And it can all take place within, if I tell people, even if it takes months, let them call, let them email, let them text message you, keep going. Because the money just keeps getting bigger and bigger. And until, let's say you get to, I don't know, 10 calls, person wants the money now, attorney, here you go. And then let's say they settle. And then they continue to call you, they continue to text message or email you on top of that. Then now you're looking at 1,000 per thousand. So I see people collect some huge paydays, including me, because I get a lot of telemarketing calls, and I tell them to send me an email. And 5 times out of 10, they will send me an email, and I respond back to them with their corporate office saying, I'm on a do not call list, and I got this email from your sales rep, and I don't approve this thing. So under TCPA, pay me 1,500 or $2,000, or I'll see you in court. And they settle like that. They don't want to go to court. Yeah.
This is great information. And I know that people are going to benefit because they don't know this, right? They do not know this information. It's not something that is publicized, of course, but just knowing that we have rights. There's so many ways that
Yep.
we know we have certain rights, and we get insurance coverages. We protect ourselves in the ways that we know to protect ourselves. But from the telemarketers and the credit bureaus, we don't know that we can protect ourselves. Now,
Right.
I
Yeah.
am curious, how did you even get into this and how long have you been doing this? Because I'm calling you an expert. So tell me, how did you become an expert at
Yeah.
the credit and debt repair?
I'll make people laugh. Say, I just got started 36 years ago. I was, working for Bank of America commercial lending in Silicon Valley. From out of high school in 1985, I was doing commercial real estate loans, and up until about the early 90s, 1990, when I got laid off after a 5, 6 year run. And and during that tender, I was actually repairing my corporate personal credit for free. There was no internet. I mean, email barely came into existence in 1988. Corporate email, intra email, let alone fax machine was the only thing that we had. So I picked up books and started doing it for free, on my spare time, and turned declines into approval. So it was worth to spend an hour after work on my own time or a weekend. But I just turned a decline application to approval where I just made an $8,000 commission, for example. So it was worth it. Um, then I had a landline that was in my 2 bedroom condo in San Jose at the time. I worked from home. And again, these things were a luxury, not a necessity back then. So the landline rings, and when I got laid off in January of 1990, and I'm faxing million resumes to other banks saying, I really don't want to do this bank anymore. Made a lot of money, but it's just too stressful. When the line rings, he says, "Hey, my name is Joe, referred by my brother Bill, for example. Um, I'm trying to get a business loan, but I did get my credit fixed." I said, "Well, geez, I got laid off. A couple. This is early April of 1990." And he says, "Oh," I said, "I didn't know that. I apologize for calling." I said, "No," and he says, "I'll be willing to pay anything to get my credit fixed." I said, "Pay?" And this bell goes off in my head. I said, okay, fax me your credit report. So a couple of days later, he faxed me the report. That's all I had. There was no email. He faxed me the report. I said, $300, which I think I undercharged. And he did it, guys, credit fix. And next thing you know, I said, I think I got something here. incorporated a business. And by Christmas of 1990, I had two full-time employees. Uh, um, and then over the next 22 years, it grew and grew and grew. By the time I sold that first company in January 2012 to a big bank, just after the real estate crash in California or all over the country, I had 560 employees and $149 million in revenue in 2011, the year before. And never know that from something I created as just as a hobby to turn declines into approvals, working in the 80s at the bank, turn it into a career, for example. And I went to night school and got an electrical engineering degree, never used it. So I sold the company for a seven-digit figure, took some time off, and we left San Jose to move to Southern California in summer of 2014. I started a boutique company in 2015, which you see today, Debt and Credit Guys. And four of my five full-time employees used to work with me with my other company. So, and at one, two, and do yeah, I called them up. Yeah, yeah. And one of them who's been with me for 30 years. So that's how I got into it. And I said, I'm not gonna, you know, my late 50s, I'm not gonna explode it. I'm not looking to make it on steroids anymore. Just keep it tiny. I don't do any advertising. They actually call me, for that. But now business credit repair, of course, we're promoting. I got a sales team of five people. We're promoting business credit repair for companies, but consumer repair, they just come to me.
Okay. So
Yeah.
this is very interesting how you accidentally fell into this because somebody said, I would pay anything to.
Yeah. I didn't pay any, yeah, like Redifix. Here I am. Yeah.
Wow. So I, as a business owner myself, I'm learning that it's really important to learn or to listen for what it is that people need and then be able to feel that need, provide them a solution to whatever it is that their problem is.
Mm.
For the consumer, they want their credit report fixed so that that way they can have a higher credit score. So they can, whether it's purchasing a property, they can be approved for a higher dollar amount or lower interest, right? There's financial benefit to them. But you're also talking about helping businesses.
Mhm.
What is the benefit to businesses? And do you have an example of businesses that you have helped clear up their credit?
Yeah, of course, I can't give names on the business because I'm in an NDA with them. But see, on like a personal credit report, that's private information. No one can just come in and access that information. But a business report, if you only to pay like Dun and Bradstreet, you can pay a couple $100 and get any company's business credit report because it doesn't have personal information on there, just about the business. But with business, there's two agencies that we work with: a Business Experian and Dun and Bradstreet. DMB is the biggest because they've been around for 60, 70 years. And a lot of people don't even know that they have a business report because these days, after the recession and then after COVID, commercial lenders are now checking to see if business credit exists because to minimize the risk of default on that business loan or line of credit, especially if it's above $1 million. Quarter million, 25,000, they don't care. They just check the personal credit and cash flow. For example, I have a client of mine in Sacramento. It's a 400 employee manufacturing company, and they make computer cabinets for computer servers. Little things go into it, and they're in a a quarter million square foot facility, et cetera. And they applied for a $2.5 million business line through Bank of America, who they've been banking with for business and personally for 20 plus years. Excellent 800 credit scores, all three owners, and great cash flow and great profitability and great balances in their account. And they said no. And the owner says, "What? What are you talking about? You declining me? We bank with you, the personal and business, everything's with you. Great, high, seven-digit balances in their accounts. If you said no to me," they said, "Why?" "We pulled your DMB report." The guy said, "What the hell is DMB?" Dun and Bradstreet. Is I didn't even know I had one, not knowing that his wife, who's one of the biz partners, she's a CFO, has set up the account 10 years earlier. So if, like on like a consumer report, anything negative or positive will report automatically to your three bureau reports every single month. In business, it's up to you. If you set up a DMB report account and you already have existing business facilities, it's up to you to report it. But anything negative will report automatically if it's there. So this manufacturing is the worst industry to have the worst business credit, notorious for having bad business credit. Construction, industrial industries, and manufacturing, the worst. notorious for having bad business credit, especially manufacturing. So when they ran the report, there was 58 judgments. I'm sorry, no, 58 tax liens, state tax liens. There was 37 judgments and a bunch of UCC filings that went bad, and rates all over the place. So that's why the bank said no, because it went back 10 years. So they take care of their books, but you can't control, oh, employees sue me, a vendor sue me. They put it on the report. Um, Lates, for example, because nowadays, without even the person knowing, if you have a DNB report already set up and all of a sudden you get approved for a couple of business credit cards, they report that automatically and make sure that if it's late, it's late. Because in the consumer world, if you have a late on your credit report, on your credit card or mortgage or car loan today, it's due today, you pay it tomorrow. Late fee will be assessed, but a late fee cannot show up on your personal report until it's a full 30 days late the following month. Business, there's no leeway. If it's due today, you pay it tomorrow. A late shows up tomorrow. It happens 7 days a week. So there's no mercy. There's no grace periods in the business sector. So they hired me. I charged them 65 grand to fix up their business credit. We're about halfway done after about a month and a half into the process. We're getting things just dropping off like flies. And in the consumer world, where us consumers have TCPA, FCRA, FDCPA protection laws, very little in the business world, very little. But commonly, if you have a company called ABC Widget Company Incorporated, very common name, there might be someone on the East Coast with a similar name. All right. It might be an LLC versus incorporation. It might be a LLP, So information, some taxing that showed up was in Michigan versus in California. It got mixed up. So they weren't there. So we had them removed and we're in the process. We should be done in the next 30 to 45 days. So that's the necessary of business credit because lenders now are checking SBA, conventional, private, venture capital, angel investors. These guys are looking for business credit, especially if they've been around for a while. And that's why these guys got declined for a business loan because of their business credit. So once we resubmit it, hopefully they'll get approved in the next couple of months.
Wow. Wow. That is impactful. $65,000 may not mean much to them
Mhm.
because the impact to them is in the
Right.
millions, right? It's negatively impacting whatever that next project is, their expansion.
Yeah,
Like,
exactly.
hurry and fix this, please, Robert,
Mhm.
help.
Mhm. Yeah.
So,
The manufacturing industry is notorious for having weird cash flow, because they have a lot of their clients on, net 30, net 45, 60-day terms, and that doesn't get paid and messes up their cash flow. They have to pay 400 employees. They have to pay their commercial mortgage, electricity, which it's a lot of electricity. I mean, there's probably spending 250,000 a month in electricity just because it's a manufacturing, it runs around the clock. So
yeah,
there's a lot of things you have to pay now and their own vendors, for example, so a line of credit helps balance those accounts receivable, accounts payable type of scenario.
it goes upstream because if they're not
Yeah,
getting paid, then they can't pay the vendors that they owe and all of that. And businesses have gone bankrupt, not because they weren't serving the community, but because they
right,
weren't getting paid on
mhm,
time and
right,
in a timely
yeah,
fashion to be able to keep the lights on, et cetera, as you
yep,
mentioned.
mhm,
All of this is very impactful. And I know that those attending the webinar, they may have some questions. They may have not just questions, but they have a lot of feelings and anxiety around looking at a credit report.
mhm.
Okay. They may not have even looked at their credit report at all, ever. And if maybe not at least in the last couple of years. What would you say to someone like that who is considering registering for this webinar and they're just unsure what they're going to get out of it and they're scared to even look at their credit report?
Well, it's like if the doctor tells you that you're going to die in a couple years of cancer because you're sick. If you better, you're afraid of doctors and needles. You better get your butt to the doctor just in case, or better, you get a second and third opinion. So, virtually by grabbing by the shirt, slap him across the face, he snapped out of it. It's not the end of the world. Credit is not 100% fixable. It runs 80, 85% successful over time. You could take personal credit, could take 6 months or more, on average to complete. Um, but get with the program, stop thinking emotionally, think logically. If you're trying to buy a home, you have to be motivated to know what's on your report. You want to get a business or start a business or buy a business, you have to know what's on there. So look at it, transunion.com, Experian.com, pull a pool, which is soft inquiry, know what's on there because 25% of the time, it could be identity theft. 30% of the time, it could be misinformation, even if it is your fault. Wrong charge off meth, wrong charge off date, open date, report date, data last activity, uh, um, the end date, things like that. They have to match up. You can't put the cart before the horse, in other words. So understand what's on your report and address it now, because if you plan on buying a home this summer, get on it now. Because if it takes 6 months, you may not be ready to buy a home until fall or Christmas time, for example. So, but some people say, can you fix credit, in 3 months? We say 6 months. Well, yeah, maybe we get your head above water high enough to get a score high enough to get a decent rate, not the higher rate, but not the lowest rate, for example, to get your home. So that might be the case in that short period of time. You know,
That's awesome. Yes. Anybody considering purchasing a home, definitely you want to take a look at your report, make sure it's clean. But what about those who are planning on getting married? I have clients who are considering getting married, and I also have clients who have considering splitting. What is the benefit of looking at your credit report in those relationship situations?
yeah. Especially someone who's looking for their future ex-wife or husband. No, no. I've seen nasty divorces. I've seen clean divorces. With my first wife, it was a clean divorce where we drew up the paperwork, just use the attorneys to do all the legal paperwork with the state. But for example, let's say if couples got 100 grand worth of maxed out credit card debt. Let's say they have 10 credit cards, 10,000 limit each, that all max out, 10, 10, 10 times, $100,000, 10 credit cards. And they're all on time, nothing in collections. But they go through a nasty divorce if they can, get logical for one time. Because in family court, even though the family judge will say, wife, you pay this, husband, you pay that 50,000. If one doesn't pay it, the credit card companies don't care. They're going to come after both of them because they're both on the credit card. They both signed the application. So it comes down to that in a lot of cases, they can do this. Call up the credit card companies in most cases saying, Mr. 10 credit card companies, we owe 100,000. So can we split it down the center, for example, and give husband 50, wife 50 with 5,000 limit each instead of 10, say, and they have it separated, and it doesn't require a credit check in most cases, and separate it so she and he have the accounts in their own name. So instead of 10,000 limits with 100,000 in debt combined, they split that and they have 5,000 limits times 10 credit cards with a 5,000 each, 50,000. And now they're responsible for their own debts if the other one defaults. As far as mortgages or car loans, they have to sell that or refinance it. But credit cards are a little bit easier to do. Student loans, no, only credit cards. But in the case of a nasty divorce, if there's joint credit on there and judge says you have to pay this, you pay that, that it doesn't get paid, no judge's order, even at the federal level, can force a creditor to say, give him her, give him that. Because they both signed the application. The credit card's going to say, I don't care, judge, what you say. Get out of my face. So hopefully they can come to their senses, even though it's like a nasty divorce, calm down, get to the table and talk about it and call up your creditors, see if you can divide it right down the center. So even in the case where if the credit cards were all paid off, they had 100,000 limits with no debt, they do the same thing, without losing that length of credit history. So each account is like 20 years old. Instead of closing and reapplying, instead of having a 20-year history, you're back down to ground zero because the length of credit history is 15% of your credit score, where credit cards are another 30%. So even if they're all paid off, Mr. Bank, again, same example, divide down the center, 50,000 and 50,000 limits, 5,000 on each card each, and they both walk their own ways, but they don't lose that length of credit history. The limit just gets lowered at zero balance, for example. Yeah.
That is a great thing to know so that they continue with whatever their credit rating is, their credit score is, without losing the history and the impact to
Yeah.
it.
Yeah.
They're not starting all over in
Yeah.
regards to that.
But unfortunately, most of the nasty divorces, though, it doesn't go that way. Painting a perfect picture. It's always better. It's not going to cost less.
Yeah, it costs less in legal fees, it costs less in credit card fees and all of that disruption, and it costs less also in heartache. So,
Oh, yeah.
um,
Yeah. The
yeah.
lawyers are the ones that win, not anyone else. Yeah. Yeah.
Literally. If you can avoid getting lawyers involved, do so.
Yeah.
Now, what about those that are just emerging? The emerging adults, they are 16, 17, 18, 19 years old, and they don't have a credit score. They don't have a credit report to run. What would you tell them right now as they are getting started?
You're someone who just moved to this country for the first time, helped one of my wife's friends who just got relocated from Vietnam, and now is a permanent resident becoming a citizen, got a workable social. I said, do this, don't do that when it comes to credit cards. So, um, mom and dad can add their daughter sons to their credit card account. Like, for example, I've got myself a Shell Performance MasterCard, for example. It used to be a regular gas card. You convert it to a MasterCard. I've had this thing for 25 years. And I was able to add my stepson, 20 years ago to it. And in a sense, he had credit on his report as an authorized user many years before he was even born. So even if a son daughter is 16, 17, you can give them access to it, one of your credit cards, but it won't show up on the report until they're 18. So I tell people credit cards is the best way to launch good credit. A car loan, yeah, but credit cards are the biggest ticket of success. Car loans and personal loans are 10% of your credit. Credit cards are 30. I have a pie chart that I'll show on my PowerPoint on Saturday. But so launch in there. So instead of mom and dad adding into a whole bunch of credit cards as authorized users, said go out and get themselves a student visa, which doesn't require any income checking or even employment, 300, 500 limit. That's it, or do a secured cash secure credit card. You put cash into an account with a big bank. Let's say you put in $1,000 or $500. They match the limit to what is in the account, but in $100 increments. And it shows up on their credit report at the age of 18 as major revolving credit. And you can use it anywhere on the planet that Visa or MasterCard is accepted. See, and that's how they build it. And over time, it becomes unsecured. So having a combination of bar credit, like authorization access from mom and dad, so if they're 18 and I add something to my 25-year-old credit card, in that example, they get credit 7 years before they're born, open, at this time, So, but the disadvantage of having mom and dad, aunt, uncle adding their son, daughter as an authorized user. Let's say someone has a 10,000 limit, but they add their daughter to it. Okay, they have a 10,000 limit and it's 20 years old. But if mom goes out and charges it up to the limit, it's going to affect the daughter as well. So it's like you're the puppet on the strings. So lates happen, you get lates. It goes to collections, they get collection. They don't call her because she doesn't own the account. If you're at a higher limit, it affects that person. So I tell people, do it on your own. You know, or if you trust mom and dad where they pay it off every single month, then that $10,000 limit with 20-year history is okay to do, but only maybe one to get a kickstart. See, because a couple of years ago, I did a webinar and I had this lady who was looking real uncomfortable going back and forth. It was with Wells Fargo Bank, by the way, going back and forth. She was an agent, mortgage agent for the company. And she didn't want to say in front of the, 800 people that were on the webinar. So she calls me after the Zoom call and is Robert, yeah, I said, her name is Betty, for example. I have a question for you. I'm 28 years old. I got a 5-year-old daughter. And couple weeks ago, this is like 2 years ago, someone came knocking at my door on a Saturday looking to repossess a Mercedes 560 SEL Mercedes Benz. And he said they're looking for Samantha, for example. I said, my 5-year-old daughter financed a car. Someone got her information even at the age of 5. And it was a car loan that was in repo status on her credit report. Now, same thing. The you know the repo guy went away, ended up getting it removed. So I tell people the moral of the story is, if your kids are turning 15, 16, 17, and 18, they're trying to get student loan financing, make sure their credit report's clean because if there's anything like that on there, it can delay or postpone for a long time that student trying to get student loan financing to go to college. Because typically you try to get approved while you're 17, when you're turning 18 to go off to college. So if it's a grant, well, it's 100% paid for. But if there's collections on there, it might get declined, even though they were underage. See, so ended up that the same law firm that helped my client with the $1.1 million in Westminster, same attorney, ended up getting them a $250,000 from the car loan, Mercedes Benz. Yeah,
Wow.
on top of that. So that money is now in a college fund for her daughter when she now the girl's got to be 8 years old, 7 or 8. So another 10 years when she goes off to college, she's got cash ready to go. It's in an interest bearing account doing something. It might be worth 350, 400 by the time she goes off to college. So,
Right.
so that's helping you check your kids' credit at all times.
Yeah. That's not the scholarship process that people are expecting
Yeah.
for their children at all. And I really do appreciate you walking us through that. It's just like you said, be careful
Right.
because certain things that would work to give your children credit, to give them some kind of a history, if not used correctly, can actually end up harming them.
Yes.
Whether
Yeah.
their information is out and now they are victims of identity theft, or they are receiving the same impact on their credit history as you are because you're not being as responsible. So I love that you say that you're giving both sides of the coin. This is what they can do. As a financial coach, I definitely want people to work with cash because that allows them the freedom of not having to consider those different alternatives.
Yeah.
But not everybody is able to work with cash only. So
Yeah.
that is why I'm having you, Robert, come and speak to our viewers, our audience, so that everyone can be educated. Everyone can be in the 1% that knows whether you are living a debt free life and you know people who are not, or you yourself are not quite there yet. You have debt and you desire to be debt free. Or there's also the other option you have debt and you just want to be responsible with the debt that you have. Everybody is welcome. Awesome. Well, that is our episode today of the podcast. Today, Plan Tomorrow. I always want you to listen, but not only listen. Take one action from watching today to improve and grow for your future. Today, plan tomorrow.
My God is able. My God is
Welcome to Today,
faithful.
Plan
My
Tomorrow.
God is
I'm your host, Aunty Foluke,
good
dedicated to
all the
helping you
time.
identify the
My
practical
God
strategies to
is
build wealth that
able.
lasts.
My
If
God
you're
is
ready to take control of your money,
faithful. My
grow
God
with
is
intention, and leave an inheritance
good
that's more
all the
valuable than money,
time.
join me
My
each
God
week
is
and find the plan, the
able.
purpose,
My
and the
God is
prosperity you've been working
faithful.
toward.
My God
The
is
seeds you plant today grow
good
into
all the
tomorrow's freedom. It's
time.
time
My
to
God is
today plan
able. My
tomorrow.
God is faithful.